Hey, welcome back to the show, guys. Welcome to Talk Crypto. Listen, it's been a few days since I last did a video, so apologies for that. It's just been a bit busy with various things, but let's dive into what is it today. It's Friday the 5th of June. Time seems to be flying, but crypto seems to be very boring, and it goes through phases, guys. It goes through phases like this. I said a while back in my videos that that after the halving, I suspect that we're going to go through a sideways action. I'll come on to that, and that's not really the purpose of this chat today. Just a quick update on the $1 a day Bitcoin challenge. I got 1,700 and again, I think it was 1,753. This is a one-take video, so I tried sort of obviously trying to remember everything, and obviously I don't all the time, and I'm trying to drive. You know, while you join me in the car, we have a chew the fat and all the rest of it. Listen, guys, if you are new to the show, I tend to do these videos as I'm in between things, usually driving the car because it's quite time efficient, and just sharing with my insights. I've been in the space since 2020. And I come from a financial services background. I've moved into technology and marketing, and that's where my passion lies. So I was in property and the mortgage market for, how long was it? Like 2 decades almost, something like that. So I'm very familiar with that space, and it's interesting leaving that legacy world behind and opening my eyes up to the opportunities that Bitcoin and the crypto and this new whole ecosystem can provide to the world. So it's very liberating. So, get back on point. This is a shit video, isn't it, guys? Sorry about this. I'm all over the place. I haven't done one for ages. I wanted to talk about property and comparing it to Bitcoin and crypto, but Bitcoin in particular. Property has always been something that's been very close to me forever. My family have always invested in property. I bought my first investment property when I was 18. I've always invested in property. I've done I've done development. I'm an landlord. I've dealt with commercial, I've dealt with residential, I've done holiday lets, I've done basically, you name it, I've probably done it within the property world. So I know this space very well. I've been in it and around it for a long, long time. And obviously, professionally, I was on the finance side of it for, again, a long time. So for me, I don't come from it, sort of have, I guess, offer a different perspective from a place of lack of experience, shall we say. I'm not just throwing out an opinion without actually having anything to back it up with. And it's a really interesting dilemma for me, and probably for lots of you. And I think the inevitability will become obvious in time, as it is for me. The reality is we're all thinking about how best to deploy our capital, how best do we make an investment, how best can we get a return on our money, how can I best plan for the future, how can I make my future self better off than I am now. That's the whole point of investing at the end of the day, guys. Otherwise we'll just be spending everything we've got in our pockets. As soon as it comes in, we'll spend it, and then we'll just sort of a rabbit in a hamster wheel, working from paycheck to paycheck, and that's not advisable. We've got to be thinking about investing. We've got to be even thinking about how do we maintain our wealth when not only do we have inflation, but we've got a debasement of currency. Just the money printing alone, the growth of the money in the system is rising something like 7% a year. So that's before inflation. So just to keep up with the debasement of currency, we have to be looking at a 7% return. You add on inflation to that, realistic inflation, you probably need around about a 12% rate just to keep your head above water. And for most of you, that will, who haven't thought about these types of things, might come as a bit of a shock, but that is the shocking truth. Unfortunately, you've got to be looking at returns just to keep your head above water of around about 12%. So there's an illusion that some of these investments are, say you invest in the FTSE 100 or the S&P 500 or whatever it is, you're making 7-8% return. Yeah, you're not keeping up. You're not keeping up with the debasement and currencies and all the rest of it. There's a motor baby just in the road there. Just having to dodge them, driving very carefully past them. So we assume property, and historically we've assumed property has been always a great investment long term. There's property for this is the reality. Property for the boomers has served them really well, but like all asset classes, it's becoming unachievable to get on those ladders for most of us, and certainly for the younger guys and girls out there. And that's what's so frustrating for many of you. And I think that's where there's a real issue within society at the moment, where there's not the opportunities for many people out there that there were for in previous generations. And ultimately, the debasement of currency that we've had has meant a lot of the liquidity has just flown into, it has basically gone into hard assets. Property, one of them, and you name all the others. But even property isn't keeping up potentially with the debasement of currency. Then you've of course got the hassles of dealing with property. Now, whether that's your commercial landlords and you're struggling with finding tenants, whether because obviously people are now not working from home, then don't need office space, whether you're a holiday let owner and suddenly you're finding that actually the holiday let market's a lot harder than it used to be. Then you've got tax changes within the buy-to-let space, especially in the UK. You can't offset your mortgage payments against your profits to reduce your tax liability. There are a whole number of factors that start to that can be challenging. And then of course you've got the maintenance. Oh, there's a leak in the roof, or there's a leaky tap, or there's a problem with the shower, or there's this, or there's a million and one things that you've got to manage with property. Often people think that property is a passive investment, and to a certain extent it is, but you've still got to maintain it. You've still got to keep on top of it. You've still got to, pay the bills, pay, whatever it is that's relevant for your business. So there's still a lot of administration, a lot of hassles and costs, way more than people think. Of course, with property, and don't get me wrong, you've got, it's an income opportunity, it's an income generating asset. So it can provide cash flow, regular cash flow, so that's a positive. It's an asset class that has been proven to be very robust in challenging economic conditions. I thought the property market will crash way more than it did in 2008 when it all kicked off, and from 2008 to 2012 I was expecting property prices to drop 50%. I was way off. They probably should have done, but what happens was there's a ton of liquidity that pumped into the system known as quantitative easing, and that money, boom, goes straight into assets. And we saw the property market didn't correct as far as it possibly should have done, and actually it then went on a huge rampage for the next decade or so. So yeah, so that's what tends to happen when liquidity comes into the system. It goes into assets. But of course, that's great for those people who hold assets. But what about everyone else who can't afford those assets? And that's what I was just talking about a second ago, about the disparity between opportunities for young and older people, with wages not rising anywhere near at the rate of asset price inflation or asset price growth. It used to be achievable for a family, to buy a family home, in the 60s, 70s, 80s, 90s, early 2000s, and it's just become less and less achievable. Wages just haven't kept up with things like house price, average house price growth. So more and more we're seeing having to have two person sort of buying a house together. One salary isn't often enough to be able to afford a house. It's blah blah blah. It's challenging. Anyway, so property has always been great if you're on the ladder, and it's always served people well, despite its hassles, despite whether it's not possibly keeping up with the debasement of currency. You feel like you're getting wealthier because you've got asset price growth, and obviously it's a cash cow because it's still generating revenue. So I get it, and that's where I've always sort of historically come from. Now, what really opened my eyes was how everything is struggling against the debasement of currency. I know assets are going up, but actually when you start pricing it in other assets, like for example Bitcoin, you realize, which is hard sound, decentralized, censorship resistant, safe, private, the most robust sound money that has ever existed, that cannot be manipulated, that cannot be just printed out of thin air, you can't just add more zeros to the number of Bitcoins that exist. When you start pricing hard assets like property and other assets, you realize actually, even though the illusion that your property is going up in value, it's still losing a significant amount when you start valuing it in terms of Bitcoin. And that really, really opened my eyes up, and really sort of made me question my thesis of, my overall strategy, because obviously we're all thinking about what do we do with our gains, what do we do with our investments, do we take some off the table, how do we rotate it into other asset classes, do we take, spread the risk in terms of not keeping all your eggs in one basket, etc., etc., etc. So we all have these sort of thoughts that go through our mind, and typically the thought process for many, and indeed for me, was, okay, well, when things are looking good, maybe end of this year and maybe next year, we'll take some chips off the table and maybe invest in another property or do something else. But when I start looking at how Bitcoin eats up every other asset class over a period of time, and again, I've talked about it in a previous video, I think it's Bitcoin 21 or priced in Bitcoin 21 or something like that. You'll go on that website and you can actually see how Bitcoin compares to every other asset class. And like I said, it's not just property. And it's quite astounding. I mean, the reality is you can't argue with facts. You might not like it, but there are facts. So the question you've got to ask yourself is, okay, you might be a property fan, supporter, that industry so well as I do, and everything's telling you should do probably what is the conventional wisdom. But when you start realizing how scarce, how important, how valuable, and how every other asset class just loses value versus Bitcoin, you really start questioning whether that is the right strategy. Sure, you might not take all your chips on the table and go all into property and then, maybe whatever. But do you even bother with property? Do you even bother going, actually, do I want the hassle? I can just hold Bitcoin. It's going to outperform property by, I don't know, what was it, 93%? Let me know in the comments. Go on the website, let me know in the comments what the latest figures are. 93%. Do I want to buy a property that's going to depreciate against Bitcoin over the next 5 years by 93%? Sure, I might be generating revenue. Sure, I'll have capital appreciation, which will make me feel like I'm getting richer, but actually I know it's still losing value against Bitcoin. Do I want the hassle of dealing with tenants? Do I want the hassles of finding holiday lets people? Do I want the hassles of dealing with cleaners, dealing with gardeners, dealing with utilities, dealing with bills, dealing with agents, do I want any dealing with a leaky roof, dealing with God knows a million and one things? Do I want any of that hassle, or do I just hold Bitcoin and just have no hassle? Literally nothing. Sure, I'm not getting the cash flow. Get that, but does that cash flow actually make up for a 93% loss in versus Bitcoin over a 5-year period? Clearly not. Sure, I guess you've got the argument. You could say, well, you could use leverage and gear yourself up with debt so you're not having to put all your cash into an asset like property, and you can leverage yourself up, and there's benefits to that. Sure, get that. But it certainly gets you questioning whether actually property is the right asset class. And this is important, I think, because actually for the younger generation, see, property was a fantastic solution for the baby boomers. They've done fantastically well out of that. Property has been brilliant. But for the younger generation, the Gen Z or whatever, I don't know what the classifications are now, the people who felt like they haven't been given an opportunity in society, the people who felt like, actually, we're supposed to be richer than our past generation and I feel poorer. Actually, I'm not progressing as I expected. Actually, I feel like I'm just treading water. Actually, I feel like I'm struggling. For the generation who haven't been gifted that opportunity and are struggling to invest, because ultimately you need to invest to actually, to be able to grow. If you're not investing, you're going backwards because of the debasement of currency. You're losing. Your salary's not keeping up. Nothing's keeping up. You're losing, and you're getting in debt, and it's getting worse and worse and worse. So for those people who feel disenfranchised and frustrated that they haven't been gifted the opportunity to get on the property ladder, to buy a home, to invest in property, to see their property grow, 20%, 10%, 8%, whatever it is a year, or over 5 years, 10 years, whatever it is. For those people who haven't seen those opportunities and haven't had the opportunities to do anything about it, this is the opportunity for them. And this is where I think Bitcoin and crypto is the opportunity of a lifetime for the younger generation who have been disenfranchised from the existing system, which has been created off the back of a fiat system, which has created inflationary money, which has created asset prices which have become unachievable for them to buy. This is the opportunity where you can buy a fraction of a Bitcoin. You don't buy a whole bit. Hardly anybody can buy a whole Bitcoin these days, and it'll become less and less achievable. But that's not the point. The point is, whatever capital you invest in Bitcoin, you're going to put it to work, and over a long time it will serve you well. Just like if you were to put some money into a property, you'll in the past that you thought that would serve you well, and it did for lots of people, and it did for a significant amount of people. But for many of you who've been left behind, who haven't had the opportunity, this is the opportunity that's been gifted to you by the world, by the universe, to actually go, this is the opportunity for you to actually make your future different. This is the opportunity that you don't have to follow the path that was previously walked by past generations. property is probably not for you. You can't buy a fraction of a whole house, but you can buy a fraction of a Bitcoin. You can buy $1 worth of Bitcoin. You can't buy $1 worth of a house. There's a house over there. Can I buy a dollar worth of that house and benefit from its growth? No. You've got to buy the whole house. So it's very accessible. Bitcoin is incredibly accessible, and it's the opportunity of a lifetime. Follow me on my $1 a day challenge. In 10 years' time, I think we're going to see all those dollars every single day that I'm buying be worth a lot more than $1. I'm getting, what did I get? 1,700 and whatever it was sats. What will those, don't dismiss the small amounts. The whole reason I'm doing a small denomination of $1 a day is to literally go, right, this is the lowest denominator I can possibly do. This is the lowest denominator you can possibly do. Dollar cost averaging every day, buying $1 worth of Bitcoin. And actually, it does make a significant difference in time. But we're going to document it and see what happens. But listen, guys, I've got to crack on. I'm sure you do too. Really appreciate if you're still here. Give us a like, subscribe, do all those amazing things. Drop us a comment. Let me know what you think. I think property is for the past. I think property is for those baby boomers who've done well out of it. But I don't think it's for everyone else who are struggling, who haven't had those opportunities, the Gen Zs or whatever you want to classify it. I think this is your opportunity. And even for those boomers out there, question, review your thought process, review whether property is actually still the right asset class for you. You're losing 93% against Bitcoin every 5 years. Might not matter to you. But maybe just think about having an allocation. Anyway, I'm going to go. Cheers, guys.